Welcome to the Life Success and Legacy Podcast. We're glad you're here, and we hope you enjoy the episode.
Hey, everybody, we want to welcome you back to the Life Success Legacy Podcast. I'm Chris Bay, joined by a couple of Yahoos from our team, Life Success and Legacy. How are you, gentlemen?
Good. Doing well.
Awesome.
Good to see you guys. So, Life Success and Legacy teaches the infinite banking concept, and we always start our boot camps talking about the four things that IBC does, right? Number one is eliminate outside debt. Number two is build your warehouse of wealth. Number four is passive income. And the fourth one is tax-free wealth transfer, right? That's just one of four. That's just 25%. I'm going to ask you guys a question. We are in the season of pennant races in baseball, right? So there's a lot of people who might be involved in watching that. I'm not a huge baseball guy, but what would you guess is the average batting average for Major League Baseball players?
Oh, wow.
Put them all together and averaged it out. What do you think their average batting average is?
175.
Yes.
200?
200?
Or no?
A little higher, actually.
Okay.
Really?
Yeah. On one site where I was looking, it was right around 250.
Wow.
Oh, wow. So in The Price is Right, Kwong would win this one.
So if I understand batting averages, that's 1 out of 4, right? Is a hit. So that's, get it? 1 out of 4.
Yeah. I'm with
Yeah. And yet 1 out of 4 gets you in the major leagues and makes you an average player. So is that 1 out of 4 in IBC still really important?
Yeah.
Oh, man.
And some people may have different priorities and all. But for me, actually, that fourth one, that wealth transfer is a pretty high priority. For you guys, how big of a deal is that for you guys?
Well, with where I'm at right now, it's giant. I mean, just because of age. To make sure that all of the flow comes downhill to the Everett crew. So it's huge.
Yeah. Well, I mean, it became even more real whenever my dad died early. I mean, he was only 62 or whatever. And, it was such a shock, partially because he was a healthy man, but also because we were like, oh, crap, we don't have anything around. We weren't structurally ready, for that to occur. Thankfully, they did have some life insurance for him, but ultimately all the other affairs in the world, were not in order. It took my mom nearly a full year of a lot of hard work and a lot of phone calls with me to figure everything out. So, there's more to that, that really registered in my brain after he passed.
So there is this element with IBC, and we love to talk about using it to finance our lives and the banking functions and all that. But Nelson, he landed on the most efficient way to control your banking function was whole life insurance when it's specially designed to emphasize the cash value. And part of the reason that he landed on that is one of those uses of our dollar. When we talk about getting 3 uses of our dollar, right? We're putting those premium deposits in, and we get the guaranteed growth, safe guaranteed growth. We get death benefit, even though it's de-emphasized in the way we design these policies.
Yep.
And we get access to those dollars where we can control our own banking function. So that death benefit is a really important piece of those 3 uses of our dollars. So then that gets us into some of the minutia, the details, the weeds of life insurance and all that. So we wanted to take a little bit of time to talk to people about the importance of and the role of ownership of policies. The players in the play is what we call it, right? It's the owner, it's the insured, it's the beneficiary, but then it's also the contingent owner, contingent beneficiary. So we wanted to talk a little bit about that. So Mike Everett, you want to talk a little bit about the players in the play, those owners, those...
There you go. Well, Nelson used to always say the number one most important person is the owner of the contract. Number one, because they're the ones that get to make the ultimate decisions. They're the ones that get to say, this is the direction I want everything to go. Then you've got the insured. This is the person's life that you're actually insuring to, obviously you don't want anything to happen to that person, but it is inevitable that they're going to die, and that would be the person who you're going to insure. Then you've got your primary beneficiary, and then you've got your other players in the play, which would be the contingent owners and the contingent beneficiaries. So I'll use a perfect example. I just paid the premium on Kurt's policy, my son, my almost 44-year-old son. This is one that I bought when he was 20. Well, no, he wasn't 20. He would have probably been 23 or 4. Now that I'm thinking about it, gosh, time flies when you're having fun. So
need a moment.
I almost did. So the bottom line is I bought these little policies on Kurt and Kara way back when, and I've just been plugging dollars into these things every year for forever. So we're literally making those changes that we're talking about as we speak. So I'm the owner. Right now, Linda is the contingent owner, but we are going to actually move Kurt up as the contingent owner, and we're going to keep Linda and I as the primary beneficiaries for the time being, and then we're making Lauren the contingent beneficiary if something were to happen to Linda and I. So those are kind of the players in the play, and there's all kinds of ways to skin the cat, but you want to do it in a way that makes sense. And, we were talking about this early on with some of your guys' policies, when you've got young kids.
Yeah.
And there happen to be, $100, $200, $500,000 rolling down the hill. You don't want a 10 to 21-year-old kid to get $500,000. What are they going to do with it?
Poof.
They're going to blow it.
Yep.
So there you go for the players in the play.
That's it. It's almost like an if-then flow chart, right?
Yep.
If you ever sit down with an attorney and you're putting together your will or a trust or anything, they're wanting to think of all of those contingencies. Well, what if this happens? Things that we don't even think about, right?
Right.
How in the world what's the likelihood that that's going to happen, whatever situation? But they're helping us think through it. So if this happens, then this. If this happens, then this. What if Sean and I both die at the same time, right?
Yep.
What if one of us passes away? All those different kinds of things that we have to consider. And we have those conversations with our clients when we're setting up those policies. Mike, you bring up a good one, and your kids are older.
Yeah.
But some of us have younger kids. You obviously have grandchildren as well. Mike Crawford, when you and Mary were setting up your policies and wills and those kinds of things, and Milo's an elementary student, what were some of the conversations and thoughts that you guys had?
Well, when we were looking at like long-term stuff, obviously, again, referring back to what happened earlier, considering my dad, that really sparked a lot of stuff with like, what do we do with Milo? Because, Lord only knows what may or may not happen. And so we wanted to start trying to prep for hopefully, the ifs, or whatever. And one of the things we decided was we had to decide on a couple of family members and or non-family members who might help us with him if we were both gone. But also what to do with the money. You know, as we continue to add policies and grow our system, it's nowhere near the size of any of yours, but we're continuing to grow it. And that's just still a lot of money, you know, even if it was 12 years, 15 years down the road, for a kid who at that point would be in his early 20s to have to manage. And so we had to think through and consider a lot of different factors between the ages of now 9 and, you know, when he's officially an adult at 18. But as we all discussed, you know, that prefrontal cortex isn't quite developed until he's 25. So, you know, we wanted to put some contingencies in there for, you know, him being a dumb young dude. And so, you know, I mean, it's the reality. I don't know what my stupid brain would have done if I was 21 and received, you know, a large sum of death benefit, you know, from anybody. And so it really did spark a lot of conversations. And, you know, we've still been modifying our decisions, you know, and it's not because of the people. It's just a matter of like, how does it structure and all that stuff, which is down the road with our lawyer. But, you know, I mean, there's a lot of stuff going on.
Yeah, absolutely. Mike Kwong, Jackie's a little bit older than Milo, right?
Yep.
Looking ahead here to college. You guys have done some serious work in kind of getting your affairs in order and updated recently. Is there anything that you and Pei were talking about that you could add to that conversation as you're thinking about Jackie as a young woman?
I mean, you know, again, like for us, the real focus has been just kind of the mindset that comes with it, right? I mean, of course, you want to have provision set up so that if the unexpected happens sooner, before she's 25, or, you know, that prefrontal cortex sets with trusts, you can stipulate for some, you know, guardrails, right? In that eventuality, and have that kind of peace of mind. But with us, it's also a matter of just, you know, talking to her about, well, what would you do with that money, right? Have the conversation. That's a great, you know, exercise anyways. And even more important when you have a, you know, substantial amount coming, you know, to them. So again, that was kind of the impetus for the book, you know, again, just kind of having those open lines of communication, education, right? Education. So that, hey, whatever that amount is, you have a plan, right? Just, you know, whether it's to, you know, pay off all the other policies, open more policies, right? That's always great. But you never want anyone to be caught off guard with, you know, well, which is a good thing in the sense of, wow, extra money, great windfall. But like I said, poof, it could be gone if it's not fair. Yeah.
Yeah, you know, the way life insurance is set up, it's pretty simple. And the fact that those dollars then go tax-free to the beneficiary, whoever the owner chooses, right? And that can be split among people, can be split among kids. It doesn't even have to be family members. It can be churches, it can be nonprofits, it can be any organization or person that you want that money to go to, and it goes to them tax-free up to a certain amount. And I forget what the number is, $12-15 million is
Big number,
right? It's a big number. And so, you know, we have clients who have a passion for, say, a local pantry, food pantry, and they have listed that pantry as their, as one of their beneficiaries. So you have a lot of control in how you can use those dollars to impact your family or your community and the things that you care about.
Yeah. And you can do it in percentages too, right? You know, so yes, you have a few passions, or if you have just way too much money and your kids don't need all of it, you can divvy that out in separate forms, right? You know, and give percentages to multiple different entities or people. So it's not really a box that you're trapped into. It's more a matter of making sure you keep it updated, just like any other document, you know, or you know, the inevitable, you know, graduation, as Everett always called it.
13.61 million can go tax-free.
Yeah.
That's a great big old number. I don't think any of us have that. In fact, I don't think we all have that together.
And that doesn't have to go into a trust for any particular reason. That can go directly to the beneficiary.
Yep.
Now, some of us have considered and talked with our legal counsels, our attorneys, about how that wants to go, primarily because we have minor children or young children or young adult children where we wouldn't want that amount of money to land on their doorstep all at once. So that's where a will trust can come into play, so that you can direct and those guide rails, to help them, to benefit them in a positive way. I read a book, and one of the phrases that I really liked from that book was you want your kids to have enough to play in the game, but not so much that they don't have to play.
Yeah. That's a good.
That's good.
That brings up an interesting conversation about this is not something we do, and we don't even necessarily say you have to ever do this. But if you are building a system of policies and you are creating a DIBS platform through, Mike and their team and group of people, that their community alone, and you do accumulate a large amount of money, it may be a valuable, tool for you to look into some legal assistance with, a trust or a will, mostly just because the management of that stuff, when you graduate, if there aren't other people on your team, family or whatever, that know how to deal with it, that could be a burden in and of itself,
Man.
And again, we're not providing any legal information and or education. I mean, we're just life insurance guys. But the long and short of it is, as your systems grow, you need to take into consideration the other things that may trickle down at the end of life. So,
well, and I'll use a great example. You were just explaining the thing with your dad and how, everything kind of you had to figure it out over the next 12 to 14 months. And it was confusing. It was complicated. And there was a bunch of I's that weren't dotted. Now, in my mom's case, this is, I'm going back a few years. My mom had a trust, but old school trusts were weird.
Skip a generation.
It was a skipping generation trust. So keep in mind, when my mom died in 98 and we got halfway through 1999, we were looking at this, and at the time I would have to do some math, but I was in my 40s, maybe my late 30s. And we went in and we reviewed the document that said, this is basically going to pay me, my brother and sister an income annually, which was peanuts, I might add. And that at the death of the last sibling, it would automatically be dispersed to all of at the time, the grandkids, so our children. So I got into IBC in 05, 06, and it was probably late 06 when I finally looked at my brother and sister. I said, so let's just do a quick look at this trust again.
Yeah.
Let's say that all three of us died today. And let's go down the road 20 years. My brother's oldest son would have been 50 when they had access to. And so what we did was we finally, I think it was late 07 when we finally got the trustee to figure out, hey, we busted it up. And the guy looked at me and he said, dude, I think you're making a huge mistake. Well, let me tell you what I did with my portion of the trust. I went and bought 3 policies. We looked down the road and my kids each would have gotten somewhere between $125,000 and $150,000. But with the life insurance that I bought on me, they were both going to get somewhere between $350,000 if I died that day.
Yeah.
Those policies, let's just say I make it another 15 years, are going to be over $500,000. Do they win?
Yeah.
They win huge. So trusts can be kind of cumbersome.
Sure.
They can be written incorrectly depending on how they're set up.
Right.
So trust can be good too.
There's
There's a lot of moving parts.
There are a lot
Yeah.
of moving parts, and I'll just recommend a book that I think is a good thought promoter. It's called Entrusted, and it's a great book about the history of trust, and it even touches on some of the things Mike Everett experienced with their trust and how that has changed. So anyway, if that is a topic of interest to you, I recommend the book Entrusted to get your wheels spinning about that. In terms of wills, trusts, even reviewing your life insurance beneficiaries, contingent beneficiaries, how often would you guys suggest that people check those things out and review them?
Minimum every 5 years.
Yeah, I was thinking every 3 to 5 years. And with your life insurance beneficiaries, I would even just make a practice of on your annual review, every anniversary of your policy, just double check. And what I'd like to do is just talk about, I'm thinking about a variety of our clients who have had to recently change either their contingent owner or contingent beneficiary or even their beneficiary. What are the life circumstances when you guys think about your own lives and clients' lives when you might change some of those? I'll start, for example, we have a client who has recently remarried.
Yep.
And she wanted to change her beneficiary.
Yeah.
And so that was an example of a life circumstance that caused her to want to make a change in her beneficiary. What are some other examples you guys think of?
You may not like your children anymore. And that was a joke.
No, better note, you may add more children, right? And
Yeah.
Yeah, can you imagine if you were the third child?
exactly.
Your parents forgot to update the beneficiaries on their life
Yep.
insurance
There
policy.
you go.
Well, can I
Perfect.
tell you, I'm not going to use names, but I have a person in my life who I've known for years that their mother was ill, dementia, and provided primary care for this person via a home, that helped them. But the long and short was nobody thought to check the will, and the kids of a divorce that was 20 years ago got all of the benefits.
Oh my God. Yeah.
So,
It can be ugly.
So the reminder is, we always joke with our kids. I was like, this is part of adulting, right? Yes, it's not fun. It's not exciting. It becomes one of the last things on the priority list because there's a lot more urgent types of things.
Yep.
But whether it's putting a reminder on your calendar or whatever it is, on a regular basis, you need to just make sure that you have your affairs in order, including who are the beneficiaries and contingent beneficiaries, contingent owners on your life insurance policies, for sure.
Right.
Mike Crawford, for our clients who maybe they're like, oh man, I need to update that,
right,
right?
right.
Can you talk about how they might go about doing that?
Yeah, so we've mentioned, I think, in our last released podcast and via some other, formats that we have a Discord channel, which is just a real simple place for people that are clients of Life Success and Legacy to have community and chat and bring up topics that are either concerning them or that are, on their mind at, 1 a.m. when they can't sleep. They can pop it in there and people will reply. In fact, this question or this topic actually did come from our Discord. People were asking, Mike's partner Pei had posted that a question about beneficiaries and what happens. And there was some good dialogue on the chat on the channel about, well, probably just something you have to review more frequently. And that got my brain thinking, like, what if we brought this out to the masses? Because we know not everybody who listens to our podcast is on the Discord. So, if you want, if you're a client of Life Success and Legacy, hit us up, message me and I'll get you the link to our Discord. And then on the Discord, we have a link back to our website that has our community page. And I'll put that information is on the Discord as well. And there are the forms for beneficiaries for Emeritus and MTL on that website, where you can just click them, fill it out, submit it, good to go.
Good stuff. Any loose strings hanging out there on this topic that you guys want to touch on before we wrap up?
I think this
All good.
I think we're good.
Yeah.
All
It's
right.
It's just one of those things that, we joke about the fact that we don't really like to claim that we're life insurance people, right?
Yeah.
I mean, it's not exciting, but because we have that responsibility as coaches and as insurance agents, to use that term that we all hate, to help our clients understand the realities of what life insurance entails. So,
Yeah.
And it is one of the 4 things that IBC does, and it's an important part. As Nelson says in his book, Mike Every, is like, once the insured passes away, the whole system becomes self-sustainable,
Self-sustaining.
right? So it just carries on. So, all right, gentlemen, thank you for your insights, your experience, your own personal life discussions that we have about this. To our listeners, please check us out at lifesuccesslegacy.com. Give us a thumbs up, subscribe, join us, all those good things, and we will catch you next time on our Life Success Legacy podcast.